Hey traders, welcome to this week's episode of Traders Trade. This is your host Dan Dow for the week of September 21 to 25. This is episode 7. Hopefully you guys had a good week. I know the market was rough, but as traders, we can go long when the market goes up and go down when it goes and go short when it goes down, right? So remain flexible and trade with the trend. All right, let's go. Let's recap last week. So the market, along with the Nasdaq, closed below the 50-day moving average, and it was led by the tech, communications, and discretionary sectors. And it looks like we are rotating into materials, energy, and industrials. So that's what we want to see. This is why we think that this is more of a correction and not a real drop. We're seeing that profits are being taken from the past performers and going into the cyclicals. So we want to see the rest of the market go up instead of just a few sectors. The spider or the S&P 500 is down 8% from the September high, and the QQQ is down 12% from its high. Economic reports were good, and that's why we think that this is more of a correction. So the PMIs were strong, along with retail sales and the leading economic indicators. Okay, for the market analysis, S&P 500. So we had the high back in September. We broke below it, tried to rally twice and failed, and now we closed below the 50-day moving average. For the Dow Jones Industrial, this sector or this index didn't make it past the pre-COVID high, failed below this trend line and tried to rally, but failed it. And right now it's right at the 50-day moving average and the June high. Dow Jones Transportation actually looks good. It's currently in this upward wedge, and it is above its pre-COVID high right here. And we have this nice trend line acting as support. So if I were to go long, this is the sector that I would put my money into. The Nasdaq, we were in this strong up channel here, and we broke below it right to the 50-day moving average, trying to make a rally twice and failed, and now we are below the 50-day moving average. And the 50-day moving average is currently sideways, so be careful of it heading downwards. And look at here, guys, back in beginning of September, at the high, look how far we were from the 200-day moving average. Look at that distance. That's definitely not sustainable. So this correction was definitely warranted. Look back here, pre-COVID, look at the distance from the price to the 200-day moving average. It's not that wide. So whereas over here, this is like double that height. And look at the price to the 50-day moving average and compare it to the price in the 50-day moving average here. So that's how much we were overrun and were due for a correction. For the Russell 2000, these are looking at the small companies. We made a high in August and didn't break above it. We tried to do it again in early September, but failed. And we bounced off from this support trend line here, and now we are right at the June high and then right in the middle of this ascending triangle. And we're still above the 50-day moving average, and we're right at the 20-day moving average. So this is a index that I would just watch and see. It's right in the middle, so I wouldn't want to predict where it's going to go. In summary, for the market, the S&P 500 and the Nasdaq are bearish. If I were to go long, I would look at the Dow Jones Transportation. Okay, onto the sectors for materials. This is the one super bullish sector at the moment. We are in this upward channel. We close above it. We're above all the near-term moving averages. And I mean, regardless of what pattern you're seeing, this triangle, we broke above it, close above it. It's pretty much in a up channel at the moment. So regardless of what patterns you're looking at, this looks like it wants to continue to go up. For energy, we were in a descending triangle and we broke below this zone of support, and looks like we made a rally, but unfortunately we're going to be hitting this resistance from this zone. Now it's going to be acting as a zone of resistance and the trend line. It looks like the probability is that it's going to rally to this area of resistance and go further down. That's where I would say a greater than 50% probability, but you know, stay flexible. We don't know how this market is going to react. Financials, we were in this ascending symmetrical triangle and we broke below it and we closed below it, but we have this the 50-day moving average as support, and we also have this trend lines, minor trend line support here. So for financial, this is a sector that I wouldn't do anything on at the moment. Too many congestions of trend lines and moving averages. It can go anyway. So this is a sector that I would just sit and watch. For industrials, this one was looking bullish, but there are new resistances now. So we had a high in September, fell down to the June high, bounced off of it, but that acted as resistance now, and we closed below it. Looking at this triangle, the resistance from it is here and also from here. So there's more resistance right now. I would think that it's going to be trading in this zone in the near future. Technology, the uptrend has been broken. We bounced off the 50, trying to make it rally twice, and now we have this downtrend line and we close below the 50-day moving average. Again, look at the distance from this price to the 200-day moving average and the price to the 50-day moving average. Compare it to the pre-COVID distance, and you can tell that this is definitely overbought. So the correction was warranted. Looks like could be a flag or a pennant is forming. So we gotta wait and see where it's gonna break to the upside or to the downside. But it looks like there's definitely still more room for this to go down further. Consumer staples, we are now below the pre-COVID high and we are in a downtrend. We are currently closed right at the 50-day moving average. We'll see if it will hold as support. If not, we'll look at this trend line support right here. If not, then it's going to be the 200-day moving average. For consumer discretionary, we were in this up channel. We broke below it and we now have this trend line that's going to be acting as a resistance trend line, and we close at near the 50-day moving average. So it's going to be trading in this zone in the near future. We got to see if the 50-day moving average is going to hold or if this trend line resistance is going to hold. Real estate right now, we are in this channel and we close right at the bottom of it. If you zoom in, you'll see that we are below the 200-day and the 50-day moving average, which is bearish. But we'll see. We'll see if there's going to be a bounce back up to the top of the channel. Utilities, we are in this bigger wedge right now. We we did have a minor triangle that we just broke below, and we're right in the middle of this bigger wedge. So it could go, back up to the top or down to this support area. Healthcare, we were above the pre-COVID high. We were trending up in this base, but broke below it to the pre-COVID high, bounce above it, try to make a rally, but now we are right near the 50-day moving average. We do have this trend line is going to be acting as near-term resistance, but we also have a near-term support from the pre-COVID high. I would think we'll trade possibly in this area in the near term. Communication, we were in this uptrend that's broken, bounced off the 50-day moving average, tried to rally but failed, and we are now below the 50-day moving average. We do have the pre-COVID high acting as support, so I would say we'll be in this area in the near term. In summary, if I'm going long, I would be in materials and maybe in some industrials. And for bearish trades, I would be looking at energy, technology, and utilities. So for some content this week, check out this video from Adam Koo of Piranha Profits. He did a great analysis for September. And I'm hearing a lot of talks about people getting into options right now. Options is a very risky tool. It's used by professionals as a hedging tool, but it looks like a lot of retail investors are using it to trade, which can be dangerous. So if you're going to do it, I highly recommend that you get educated on it. And for that, I recommend the Options Industry Council's Education Center. Both links are in the description of the video. Events for this week for earnings, I'm looking at AutoZone and Nike on Tuesday. For Wednesday, we have General Mills, Cintas on Wednesday. On Thursday, I'm looking at CarMax. I'm interested in seeing how the used car sales are doing due to the pandemic. We have Darden Restaurants and also Costco, the major retailer, on Thursday. So events for this week, look at the 50-day moving average. We can possibly go further below it, and we should expect a continuing rotation outside of tech, right? Taking profits from tech and moving it into the cyclicals, which is what we want to see for a healthy market, right? We want the whole market to go up and not just technology. And election is seeping uncertainties into the market, especially with the news over the weekend from the passing of Judge RBG. Very unfortunate, but now that is going to create a search for a new justice along with the election in November. There's going to be a lot of uncertainties now. For economic events, we're looking for existing home sales on Tuesday, new home sales on Thursday, and jobless claims. And then we have the durable goods orders on Friday. So in conclusion for this week, definitely look at the 50-day moving averages. Right now, they are moving sideways. And if the price is going to take us lower, then the 50-day moving averages are going to be heading down, which is going to be bearish. There are going to be uncertainties in the market now due to the upcoming election and the upcoming flu season, especially if you mix it in with the COVID. And right now, since we don't have a vaccine for it, we don't know what's going to happen. So just be careful. All right, everybody, happy trading. Have a good week, and I'll see you guys next week.